Hello dear students, in this video we are going to study the problem of journal entry, ledger posting and trial balance in one problem. Okay, myself Professor Vaishali Bharat Gholab. Problem first, generalize the following transactions in the books of Sun Fashion Private Limited and open the necessary ledger accounts and balance the accounts and prepare a trial balance as on date. These are the 5 transactions given. From that transaction, first of all, we have to prepare the journal. From journal, we have to prepare the ledger and then trial balance. Okay, journal is the first step of accounting in which we record each and every transactions. Then in ledger, we classify the accounts and prepare each account separately and balance and total. And that balancing amount we transfer into the trial balance. Okay, these 3 steps we are going to cover in this problem. First transaction is purchase goods from Manik on credit rupees 500. Second date, sold goods to Patil on credit rupees 800. Purchase machinery for cash rupees 2000. Fourth, receive commission rupees 500. Fifth, paid office rent rupees 150. First step is preparation of journal, recording the transaction first time in the journal. Proforma of journal is date, particulars, ledger folio, debit and credit. What is the journal entry? In journal entry, we read the transactions carefully. First transaction is purchase goods from Manik on credit rupees 500. Then we have to identify which 2 transactions involve, which 2 accounts involved in these transactions, because every transactions have a 2 aspects, that is receiving aspect and giving aspects. That's why first step of recording the journal is we have to identify which 2 accounts involved in these transactions. What is the transactions? Purchase goods from Manik on credit rupees 500. Here transaction is on credit basis. That's why first one account is purchase account, another account is Manik account. Why Manik? Because transaction is on credit. Okay, purchase account to Manik account. Purchase account is a type of real account and rule of real account is debit what comes in. While purchasing the goods, goods are coming into the business. That's why purchase account is debited to rupees 500. And to Manik account. Manik account is a type of personal account and rule of personal account is credit the giver. Manik is giving the goods to the business of Sun Fashion Private Limited. That's why Manik account is credited with rupees 500. And this is the being credit purchase of goods from Manik is a narration, means short explanation about the transaction. Okay, first transaction, in first transaction purchase goods from Manik on credit rupees 500. Purchase account to Manik account. Purchase account is debited and Manik account is credited. And narration is being credit purchase of goods from Manik. On second, sold goods to Patil on credit rupees 800. Here which 2 accounts are involved? Sold goods to Patil on credit, as this transaction also is on credit basis, means one account is sale account, another account is Patil account. Here Patil account is a type of personal account and rule of personal account is debit the receiver. Patil is receiving the goods from Sun Fashion Private Limited. That's why Patil account is debited with rupees 800. And to sales account. Here sales account is a type of real account and rule of real account is credit what goes out. Here goods are going out of the business. That's why sales account is credited with rupees 800. And narration is being credit sale of goods to Patil. Clear second transaction? Now third transaction. Third transaction is purchase machinery for cash rupees 2000. Here transaction is on cash basis. What is purchase? Machinery is purchase. That's why purchase purchase machinery for cash rupees 2000. Here transaction is on cash basis. Which 2 accounts involved in this transaction? One is machinery account and another is cash account. Why cash? Because given transaction is on cash basis. Okay. Machinery account is debited. Machinery account is a type of real account, and rule of real account is debit what comes in. Here machinery is coming into the Sun Fashion Private Limited. That's why machinery account is debited with rupees 2000 to cash account. Here cash account is also real account, and rule of real account is credit what goes out. Cash is going out of the business. That's why cash account is credited with rupees 2000. Narration is being machinery purchase for cash. Clear third transaction. Now fourth transaction. Receive commission rupees 500. Here which two accounts involved? Cash and commission. Why cash? Because we receive the commission in cash. That's why one account is cash, another is commission. Here cash account is a real account. Rule of real account is what comes in we have to debit it. Cash is coming into the business as we receive the commission, means cash is coming into the business. That's why cash account is debited with rupees 500 to commission account. Commission account is the income. Okay, and this is a type of nominal account, and rule of nominal account is credit all income and gain. That's why we enter the commission account on the credit side with rupees 500. Narration is being received commission. Then fifth transaction, paid office rent rupees 150. Here which two accounts? Cash and office rent, right? Office rent is the type of nominal account, and rule of nominal account is debit all expenses and losses. Here we have paid the office rent, means that is expenses. As per the rule of nominal account, debit all expenses. That's why office rent account is debited with rupees 150 to cash account. Okay, cash account is a type of real account. Rule of real account is credit what goes out. Here while paying the office rent, cash is going out of the business. That's why cash account is credited with rupees 150. Okay. As we have prepared the journal, last step is we have to total debit column as well as credit column. Okay, this is the journal entry of these 5 transactions. Now we have to prepare the ledger for each accounts. Okay, see, this is a journal which we have prepared in previous. First account is purchase account. That's why first ledger we are going to prepare the purchase account. Okay, purchase account, this is a pro forma of ledger. Debit side, credit side. On debit side, date column, particulars, journal folio, amount. Similarly on credit side, date, particulars, journal folio and amount. Okay, purchase account. Here on first date, purchase account entry is on debit side. That transaction's credit account. That transaction credit account we are record on the debit side. That is date first to Manik's account rupees 500. Now another, is there any another purchase account? No. There is only one transactions in which we observe the purchase account. That's why on purchase account we have to balance the credit side, because we have to balance both debit and credit. Here only we have record first two Manik accounts 500, but there is no any transactions in which purchase account entries on the credit side. That's why to balance both the sides we need to add on credit side last date of that month, that is 31st, by balance carry down rupees 500. Now total both the sides 500 500. Then on opposite side of carry down entry we record the on debit side starting date of next month, that is first, to balance brought down 500. This is a purchase account. Clear? Purchase account ledger. Now after purchase account there is a Manik account. That's why we are going to prepare the Manik account ledger. Okay, here Manik account entry is on credit side, right? On credit side, that transactions debit account we record on credit side. You can see here that transactions debit account we record on the credit side. Date first by purchase account rupees 500. there is no any transactions in which we are not observing any Manik account. That's why to balance both the sides of Manik account, we need to add on debit side 31st to balance carry down 500. Now both the sides are equal, 500, 500. And opposite side of the carry down entry, we have to record the brought down entry. Date of that brought down entry is starting date of the next month, that is first, by balance brought down 500. That is a Manik account ledger. Now after Manik, there is a Patil account. Patil account ledger is Patil account. Debit side, credit side. Here Patil account entry is on debit side. That account credit, that transactions credit account is sales account, which is recorded on the credit side, that we record on the debit side. Okay. Date second to sales account 800. There is no any other transactions where we are not observing the Patil account. That's why to balance both the sides, as we record to sales account on debit side, to balance the credit side, we need to add the carry down entry. That is 31st by balance carry down 800. Now both sides are equal, 800, 800. Opposite to the carry down entry, we need to write down to balance brought down 800. This is the Patil account ledger. Now we are going to prepare the sales account. We have to follow the same sequence so that we are going to prepare the all accounts ledger. After Patil, there is sales account. Now we are going to prepare the sales account ledger. Okay, sales account. Here sales account entry is on credit side. Okay, sales account entry is on credit side. That transactions debit account we record on the credit side. You can see here by Patil account 800. And there is no any other transactions where we are not observing any sales account. That's why to balance the debit side, we need to add the carry down entry, that is 31st to balance carry down 800. Now both sides are equal, 800, 800. Opposite to the carry down entry, we need to add the brought down, that is first by balance brought down 800. This is a sales account ledger. After sales, there is a machinery account. Machinery account ledger. Here again, same pro forma of ledger we need to prepare. Machinery account entry is on debit side. That transactions credit account we record on the debit side. You can see here third to cash account 2000. There is no any other transactions where we are not observing the machinery account. That's why we need to add balance both the sides. 31st by balance carry down 2000. Both sides are same, 2000, 2000. Now opposite to the carry down entry, we need to add brought down entry, that is first to balance brought down 2000. Okay, now machinery account. After that commission account, because cash account we require the more number of rows. That's why first of all we are going to prepare the commission account. Commission account. Here commission account entry is on credit side. That transactions debit account we are going to record on the credit side by cash account 500. Similarly, there is no any other transactions where we observe the commission account. That's why to balance both the sides, we need to add opposite side, that is on debit side 31st to balance carry down 500. Both sides are equal, 500, 500. Then brought down entry is on the credit side first by balance brought down 500. Okay. Now another account is office rent account. Okay, office rent account. Office rent account entry is on debit side. That's why that transactions credit account we record on the debit side. Fifth to cash account 150. There is no any other transactions where we are not observe the office rent account. That's why to balance the credit side 31st by balance carry down 150. Both sides are equal. Opposite to the carry down entry, we have to enter the brought down entry to balance brought down 150. Now cash account. Last is cash account. Cash account debit side, credit side. Here cash account on third we observe the cash account. Here cash account entry is on credit side. That transactions debit account we record on credit side. You can see here third by machinery account 2000. Okay, Then another transactions where we observe the cash, that is fourth. Here on fourth, cash account entry is on debit side. That transactions credit account we record on debit side. You can see here fourth to commission account 500. Okay. Then after fourth, there is a fifth date transactions. Here also we observe the cash account. Here cash account entry is on credit side. That's why that transactions debit account we record on credit side. You can see here fifth by office rent account 150. Now credit side is 2150, debit side is 500, means here credit side is more than debit side. To balance both the sides, we need to add on debit side 1650 as 31st. To balance, carry down 1650. Now both sides are equal, that is 2150, 2150. Okay, opposite to the carry down entry, we have to make the first by balance brought down, that is 1650. Okay, here we have completed the ledger posting. Now third step is preparation of trial balance. Preparation of trial balance is simply we have to prepare this pro forma, that is serial number, particulars, ledger folio, debit and credit amount. Under particular, we have to write down each ledger. Okay, first of all, we have to prepare the purchase account, Manik account, Patil account, then sales account, machinery account, commission account, office rent account and cash account. In the same way, we are going to write under the particular. You can see here purchase account, Manik account, Patil account, sales account, machinery account, cash account, commission account and office rent account. Now on which side we record the amount? See, in purchase account ledger, brought down entry is on debit side. Brought down entry is on debit side. Okay, brought down entry is on debit side. That's why in trial balance we record the purchase account on debit side. You can see here 500. Similarly in Manik, under Manik, brought down entry is on credit side. That's why Manik account is credited with rupees 500. Then Patil account. Patil account, debit, on debit side there is a brought down entry. That's why Patil account is debited with rupees 800. Sales account. Here sales account, brought down entries on credit side. That's why sales account is credited. Machinery account entries on debit side 2000. Cash account entry of brought down is on credit side. That's why cash account 1600 on credit side. Then commission account brought down entries on credit side. That's why on credit side we record the 500. Office rent account, brought down entry is on debit side. That's why office rent account is debited rupees 150. Now total of both the column, that is debit column and credit column, that is total is 3450. Credit total is 3450. If this total is same, that means we have recorded each and every transactions by using double entry system of accounting. Okay, if that total is not match, means there is some wrong entry recording. Okay, that's why here by preparing the trial balance we can accurately see that whether we have followed the double entry system of accounting accurately or not. Thank you.